Everybody knew this was coming. And it's a long time. You know what I mean? The market's been going up since 2010. I used to buy houses for $40,000. They're worth $600,000. Same exact house now. So now what's happening is, this is a forced recession, by the way, because the unemployment rates were low. Everything was going beautiful. And then, you know, they had to be like, well, you know what? If a guy bought a house for $60,000 in 2010 and now it's worth $600,000, and the inflation rate, they supposedly say, is 8%, but I don't know anything that's only gone up 8% to you. Gas is up 150%. Houses, like I predicted, went up double what I thought they were going to do, because the supply chain is low and they gave away trillions of dollars. Where's that money going to go? It's going to go back on the street, right? So now they have to force a recession to slow things down, right? So when you look, the one thing that hurt the real estate the most, that's going to hurt it badly, and it's not even going to be that bad, and I'm going to tell you what it is. It's the interest rates are going up. Everybody's looking, well, it's extremely obvious, right? Of course. But what they don't understand is that's not going to control the housing market. If a 2x4 costs $8 and a permit to build a house costs $30,000, $40,000, and a lot is $200,000, how's it going to drop in value? And what they're not telling you is the hedge funds own 30 to 40% of the single family homes. So why would they?
Is that how much they really own?
Of course,
like
here in
BlackRock
Florida,
and shit.
Blackstone.
Yeah.
Well, there's a bunch of them. I've sold thousands of houses to investors who eventually sold them to hedge funds. So it's like this. Here's how it works. Supply and demand, right? Rents have skyrocketed. Florida is the third most populated state in the United States. People come here every single day, right? It's hot. We don't have any state income tax. People want to be here. Luxury Airbnb, $700 to $1,000 a night. The money is still flowing, but they shut the faucets off. So the next way they're going to lower the values of the homes, watch out. When you sell something, you're going to have an appraisal review. The banks are like, oh my God, they're going up too fast. So what they do is the appraisers put the brakes on. But I'm going to tell you how to defeat all that. That's irrelevant.
I saw on Instagram, I saw a meme that said, which it's a meme on like a hip hop meme page, which validates it in my opinion. That said that, sorry, I apologize in advance. My brain is like human soft serve today because I got really fucked up last night at the hockey game.
Tough game.
Yeah, bro, that was a tough game.
Hard.
I'm not really a big hockey fan. I just kind of got into
Exciting. I love it. The fight.
It's so much fun.
It's incredible.
It's like going to a fight, but like there's a little bit of hockey.
It's like going to a soccer game with a lot of fighting and no crying.
It's fucking cool. Amazing. I really like it. Super high energy.
Mm-hmm.
So, yeah. Anyways, that meme that I saw, it said that Florida is now the most expensive state to live in.
Well, that's not true.
It's not true. Okay.
California, New York City. But regardless of that, here's what's happening. The hedge funds are licking their chops because they're waiting to see the sheep dump. Like just this week, I bought 3 houses. And in the past 3, 4, 5 months previous to this, I wasn't buying much. I was just developing my dirt. So now what's happening is CNN, the Communist News Network, they're out there scaring you just like they did with COVID. They're trying to make you nervous so you could like panic. So when people are in panic mode, they just make poor choices, okay? So when it's like this, let me give you an example. Let's pretend you're at a poker table or you're at a blackjack table and you start with $100,000 in chips, right? And you got $1 million in chips in front of you. How much have you made? Or how much have you made?
If I started out with 100, now I got $1 million, I made 900.
You made 0 because you haven't cashed in yet. You understand?
Okay, yeah.
You didn't go to the cashier. So if you don't sell your house, you're not losing. You're not making. But it's people's perception. What people perceive to be real is real, right? But the houses will drop due to the fact that most people who buy houses get conventional or FHA or VA loans, right? But what they're not taking in consideration is the hedge funds buy houses to rent them because the rents are astronomically high. Plus the houses go up in value and they depreciate the assets and it's better for them on their taxes. So owning an asset is really a liability because you're depreciating it while it's going up in value. You realize your money when you sell it, but you never sell it because you're always borrowing against it. So it's just like a cash register that sits there accumulating wealth, right? The regular person's taking a beating because they don't know the system. They don't know the game. This is basically their nest egg is implanted in this house. So the rates have gone up just this year about double.
Right.
Like January 1st, the interest rates were 3%. Now they're 6 and change. So these people who have gotten loans, anything over 5%, they're in jeopardy of foreclosure. But how you beat that is this.
Wait. Sorry. Say that one more time.
Okay.
I'm sorry. I'm retarded today.
No problem. So let's say
you get a loan and your interest rate's over 5%, you're in jeopardy.
Right, due to the fact that your payment has escalated in price. You know what I mean? Like if you go right now and you look up amortization schedule,
right,
and you put up 500,000 30-year loan 3% compared to 30-year loan 6%, look how much more money you're paying for that debt, right?
Right.
So these people, their houses will drop, and then if they bought a house for 600,000 and they put 10% down, so that means they owe 540, right? Mm-hmm. In 6 months, the house is worth 500. So now they lost their down payment plus they lost 40 grand. If they sell it, they lose. Then they got to pay realtor fees and closing costs. So they're already upside down.
Right.
So we have to try to figure out how can we get to these people to control their assets. You make money in real estate by controlling, like lease options. Purchased with let's pretend that you have a mortgage of 500. I come to you. All right, look, you owe 500. Your house is worth 480. Why don't you just deed the house in my name? I'll give you a couple $1,000s. So basically, the mortgage is in your name. I'm the new owner. You understand how that works?
Yeah.
Because I'm buying it subject to your mortgage. Then I call your bank. Hey, guess what? Surprise. I bought this property. It owes this. It's worth less. Maybe me and you can make a deal where I can just buy this house from you. I could buy the note. So this is what's going to wind up happening. And you have to remember, from 2009 to 2012, short sales, foreclosure, this was an everyday thing. Okay? So people are just coming back, and this is what's going to happen again. We just got to try to figure out how we could control the assets so we can make money. Due to the fact that the rents are extremely high. So pretty sure a lot of investors out there, you know the term hard money. You get a hard money loan. You're familiar with, you buy a house for $200,000, you put 10, 15, 20% down, they'll charge you 2-3 points, 12%, 10% interest, whatever. So these are loans that are usually 1 or 2 year balloons. And these are taken by investors who are going to renovate the property and resell it. So a lot of these lenders now, they're going to be on the hook because a lot of these people are not going to want to finish the projects. So those people are going to be in jeopardy. The banks, whoever lent these people the money, private individual, whoever it is. So the way to make money on this is you go to the guy who has a hard money loan. Hey, real quick, what do you owe on this? It's public information. We'll just look it up. All right, I owe 150. Okay, it was worth 300 after repair. Now it's worth 200, 250, whatever the number may be. Right. So those people are in jeopardy of losing money. So what you do?
So these people that got hard money loans.
Mm-hmm.
Okay.
They bought the property to renovate it due to the fact that the properties were escalating 2 to 3% a month.
Right.
They're thinking no matter what, the longer I take it, the more I make. Right. So now if it takes a little downfall, those people are going to be nervous because this is an investment. They don't live here. And most of these times, the property they lend you based on the asset, not on your credit situation. And most of these houses are owned in limited liability corporations. Mm-hmm. And if the lender doesn't make you sign a personal guarantee, you could just give the property back and it doesn't really affect you. So you need to source these properties, get a contract to purchase it, and negotiate with the lender. So let's say a lender, let me give you how you negotiate. Let's say you owe $200,000 at 12% 1 year balloon. You call the lender, hey, guess what? Your guy that you lent the money to, I think he's having difficulties, he's going to pay you. I want to purchase this asset. Why don't you give me a 5 year balloon at 3%, 4%? He's like, no, why would I do that? I'll just take him in foreclosure. Okay, so let me just put in a limited liability corporation, claim bankruptcy, and you can't even contact me legally. So this is, now it's like when two rocks hit together, something's going to break. If two rams are hitting their heads together, one of them will fall, right?
Right.
So the reasoning all this is happening is due to the interest rates. Because the higher the interest, the more the payment. The more the payment, the less people can afford. The less people can afford, the less the house is worth. So this is what's going to happen. But we're going to make millions of dollars during this next crash.